All right, this is your Delta update for Japanese automakers, covering the critical period from January 22nd to the 26th. And the key thing you need to know is the entire operating environment has just changed.
The bottom line here? The entire board has changed. Any assumptions you had just a week ago, you can basically throw them out the window. It's a new game.
So what's behind all this? It really comes down to one massive wild card that's just jumped back into the picture: renewed uncertainty around U.S. tariffs.
Okay, so here's the deal. That 15% tariff rate that everyone had baked into their models, it's suddenly on very shaky legal ground. There's a U.S. Supreme Court ruling coming that could go one of two completely different ways. On the one hand, things could revert to the old 2.5% rate, which would be great for margins. On the other, we could see even higher blanket tariffs under Section 232. The big takeaway here is that predictability is just gone. FX and margin uncertainty are officially back, and that changes the entire calculus. So who gets hit hardest by this volatility? It's Mazda and Subaru, no question. You can see here, because they import such a high percentage of their cars into the US, their entire business model just got a whole lot more complicated. Okay, so that's the big macro picture. Now let's drill down into how individual companies are handling this. Who's winning and who's losing right now? All right, let's start with the clear winner this week, Subaru. Man, they have come out swinging with their new pricing. This is a seriously aggressive move to grab back market share. And this is the number that's shaking everything up, $34,995, for their new dual-motor, all-wheel drive EV. This price point is an absolute bombshell, and it puts incredible pressure on their rivals. And look, this isn't just about a low price. The Uncharted is a massive leap forward in tech. Just look at these numbers. Range jumps way up to over 300 miles. Charging time slashed in half. And it's got the NACS port standard. They literally fixed every single complaint about the old Solterra. Okay, now for the other side of the coin, the losers. And right now, that's the Toyota-Suzuki joint venture. The early reviews are in, and they've exposed a huge and honestly pretty predictable problem. The software is just not there.
Yeah, and this slide really lays it all out. The hardware, it's great. People are praising the all-wheel drive, the design. The chassis is solid. But then you get to the software, and it's a disaster. Laggy, a generation behind. You just can't get away with that in 2026, not when you're up against Tesla and the Chinese brands.
So this really just confirms our thesis on Toyota's strategy. The urban cruiser EV is basically a Suzuki with a Toyota badge. It proves they're deliberately outsourcing their entry-level EVs so they can pour all their R&D money into hybrids and that holy grail, solid-state batteries. All right, let's shift gears to Nissan. Their story is a little more mixed. They've made a really aggressive price play with their next-gen EV, that's for sure. They're aiming for straight-up volume leadership. And here it is, $29,990. That's for the 2026 Leaf. I mean, before any tax credits, that makes it the cheapest compact EV in the US. It's a pure volume play. Okay, so keeping all that in mind, let's look ahead. What are the big risks and the major catalysts you need to be tracking right now? First up is a huge number coming out of Toyota. They've told their suppliers to get ready for a global production floor of over 10 million vehicles in 2026. That is a massive statement of intent. But here's where it gets interesting. The disconnect. They're promising this huge number right after we heard they're cutting EV production by 30%. So what's the message here? It signals they are incredibly confident that hybrid sales will more than fill that gap. That's the story they're telling investors to calm everyone down. All right, now I want to talk about a very specific and very real risk that's now facing Subaru and Toyota's current EVs. It's called the Osborne effect.
So what is the Osborne effect? Well, it's pretty simple. It's what happens when you announce a fantastic new product and it's so much better than what you're selling now that everyone just stops buying the old one. They just wait, and your current sales can absolutely crater.
And that is exactly the trap Subaru might have just set for itself. As this quote says, they're signaling a huge shift away from just making compliance cars to actually going for big volume. But you have to ask yourself, why on earth would anyone buy a Solterra today when they know this much better, cheaper, Uncharted is right around the corner? Okay, so what are your action items? Two things to watch like a hawk. First, that Supreme Court tariff ruling. That is the single biggest event on the horizon for these importers. And second, keep a close eye on the February sales numbers for the Toyota BZ4X and especially the Subaru Solterra. That's going to be our first real clue if the Osborne effect is actually happening.
And that leaves us with the billion-dollar question, right? Subaru made a bold move, probably the right move for their long-term future. But in the process, did they just kill their sales for the next year to do it? We're about to find out.